I do want to get your sense in on how you're looking at the whole rate cut narrative right now and the fact that debate is getting louder about zero rate cuts this year.
So certainly I can't say the probability is zero on that, but so far the dot plot still shows 3 cuts. Now the market is probably going to veer more and more towards 2 cuts max is probably where we're going. That said,
and then 1 and then 0.
1 and then 0. So
remember the dot plot's reflecting 7 at the start of the year.
Well, so that was where the easy money was at the beginning of the year, because certainly we did not think that that was likely. However, at this point now, there is more. I think the debate is it going to be potentially something that's one and done or 0? So is it 0 or all in terms of with the pace? I think I have a couple of thoughts. One is that I still believe in all the posturing of the Fed that overall they lean towards wanting to cut. Now, do they need to cut? Currently, when we look at the data, they don't need to cut. And certainly we're not in a very constrained environment macro-wise now. But, I think they lean towards wanting to. And so we obviously all eyes are now on the CPI data next week. But there is also a school of thought that, it doesn't make sense for the Fed to ever do a one and done. So it's either going to be some kind of, sequential, which may be stretched. So my own view where it has changed is I think terminal neutral rate will rise, but I don't think that it's going to affect their wanting to start the cuts this year.
You say need to, want to cut, right? But I would put forward perhaps, on the fiscal side, right? The excessive interest that they're having to pay, they're obviously kicking the can down the road and just rolling over in terms of the T-bills. But doesn't the Fed need to make a decision in respect to trying to ease the pressure on the borrowing costs for the government? I'm not saying, they're intrinsically tight. I'm not going to, perhaps some people think so. But don't they need to soon make a decision as to whether or not, if we continue to see this little bit of stickiness in inflation, okay, we're going to keep this, restrictive rate setting going, or at some point, unless this fiscal side can actually juice up the economy enough to grow into what we're seeing, that interest payment is going to absolutely balloon and just be the largest, if not already the largest expense on the fiscal balance sheet.
Yes, at some point there will be a day of reckoning. I just simply don't think it's going to be this year. Yeah. So yes, it will be kicked down. And, it is election year. But also keep in mind that they haven't really given us too much comment on the direction of when they're going to taper on QT. So that's going on in the background. Arguably that's not going to make a huge difference because anyway, we are, not in restrictive territory and so forth, and the banks are flush with capital, liquidity rather, right? So I think that this isn't something that is going to be the foremost, in my opinion, in election year. It's really as simple as that. And the fiscal spending is really, largely occurring on the state level. But yes, the deficit is continuing to increase. This will be, I think, able for. The Fed will be able to manage this supply-demand dynamic in the second half of the year, I believe, and partly because they have other levers as well.